I'm going to get to Steve Liesman. He's got the results of the CNBC NRF Retail Monitor. It's important because we've been trying to understand what's going on with the consumer these days. Steve?
Yeah, consumers, Andrew, registering a second straight month of strong sales, according to the CNBC NRF Retail Monitor. The good numbers come amid separate data showing extremely downbeat views on the economy. So people spending anyway. They could reflect, though, these numbers, some tariff front-running and could show a slight benefit from the calendar being the switch of Easter into April. But anyway you slice it, consumers are still spending. The monitor, powered by real credit card spending data we get from Affinity Solutions, showing the headline number, autos and gas, up 0.7 month on month. The core number, which also removes restaurants, rising 0.9. Year over year, the headline is up a robust 6.8%, core up 7.1. It's the second straight month or strong month of two negative numbers. Well, we had two negative numbers to start the year. Whatever the reason for the gains, it shows the consumers have the wherewithal to spend. Indeed, the NRF saying in its commentary on the numbers, consumers maintain their ability to spend with tariff uncertainty still in place and have strong reasons to spend as they get ahead of price increases and any supply chain dislocations. Now, some of that front running could be seen in electronics and appliances, which were up 2.8%, but building and garden supplies 2.8%, health and personal care 1.4%. Maybe front running in clothing up 1.1%, furniture and home also up 0.9%. Restaurants and bars were one of only two numbers that were just barely negative of the sectors that we follow here. Now, just worth noting here, Fed Chair Powell also mentioned credit card data yesterday that he's seeing showing consumer spending remains strong. I know the Fed routinely looks at high frequency credit card data, just like we're showing to you in the CNBC NRF Retail Monitor. Andrew?
So, how do you project? I mean, to the extent that you can project out from these numbers a quarter or two, or can you?
It just makes it hard. Look, it's important to understand the backdrop here. And the backdrop is unemployment is low. Incomes have been rising above the inflation rate. And just sentiment's down. It kind of backs up Powell's notion here of not to make a call on the sentiment data, at least not yet. We do expect some, give back from the front running. We know that's going to happen on imports. That'll help the second quarter. But there may be a retraction in some consumer spending if indeed there was spending to get ahead. I thought it was really important. You asked one of your guests in the last half hour if they did see any front running. They did not. So we're just going to have to keep pressing this issue to see how much were people buying ahead of time and how much was, well, I have the money, I'm going to spend it now. We're just going to have to be careful. It's a reason, Andrew, why I think the Fed is very cautious here, because there's a lot of noise in the data.